Are you a successful online coach or business owner? But despite those high revenue months, you struggle to manage your finances in a way that allows you to not be stressed out each and every month over a lack of a system and plan. You have financial goals, but you're just not really sure how to move the needle on them. It feels like money is just constantly getting lost. So, I'm going to show you the cash flow funnel system that I teach coaches when I work with them and how to manage your personal and business finances all the way from the beginning of when you get revenue all the way to spending money in your personal life and hitting your financial goals. I'm Justin Green, certified financial planner, and I work with online coaches and business owners that are on that financial treadmill and help them get off it so they can start avoiding tax surprises, organize and manage their cash flow, and start hitting their financial goals. If you want to do this with me, go ahead, click the link below to set up a free introductory call to learn more about working together. But let's dive straight into the coach's cash flow funnel. Okay, so what we've got here is what I like to call the coach's cash flow funnel. And now the very beginning of this is how do you make money, right? And so we start with your payment processor. Now Stripe is a very common one, so I just put their logo here, but this could be PayPal, this could be Wave, this could be whoever you use. This might even be multiple processors, although I wouldn't necessarily recommend that, maybe one or two at most. But whoever is collecting that revenue when you're billing the client, that's where we're starting right here. So I put Stripe as the most common. And then what's going to happen is that money is then going to get paid out to you. And where it gets paid out to is extremely important. One of the biggest mistakes I will see coaches make is that it just pays out to their personal account. If you're running a legitimate business, you should have an LLC and an employee identification number called an EIN number, which allows you to set up a business bank account. Now, I love Novo. They're an online business bank account technology that's supported by a local bank. But this could be whoever you're using for your business bank account. I just put Novo here. That's what I like. So you want to make sure you have a business bank account set up that Stripe is sending all that revenue to. And just remember, they're subtracting their fees before it hits you. So if you're billing a client $1,000 a month, you're most likely only getting probably like $970 from Stripe. They're taking out that roughly 3%. So I made note of that here. So what'll happen is that money will then hit your business bank account. But what do you do then? That's where we then take a look at how you want to divide the money. So the very first thing I recommend, and Novo makes this super easy because you can set up what's called a reserve bucket, is set aside tax money. If you can do this automatically, great. If not, go in manually twice a month, say the 15th and the 1st, and figure out how much revenue you've been paid and then set aside a percentage. So tax account, you want to put aside probably about 20 to 25% of revenue. Now, if you're working with me or another tax professional, we'll figure out a more precise number to make sure that you're not getting hit with tax surprises each and every year. One of the biggest mistakes that happens to coaches. Then the next thing is, how much are you paying yourself? So an owner's pay is a distribution. If you're operating as a LLC solo owner, then all you do to pay yourself is just transfer money. So you're going to transfer money out of your business bank account to your personal bank account. This is called a distribution or an owner's draw. And it's actually really simple. One of the questions I get a lot is, how do I actually pay myself? And if you're not an S Corp, then you literally just transfer the money over. So as simple as that. Now, one thing to also point out, the tax money that you're saving, you should be putting in a savings account. But when you make your tax payments to the IRS, this is actually a personal expense. So you should move it out of the business account into a personal account and then make that tax payment. And then you have your business expenses. And now this could be a lot of different things for an online coach or an online business owner, but it's going to be your software. It's going to be any type of office expenses that you have. It's going to be your accounting software, all that fun stuff, your mentorship, your education, all of that's going to run through as your business expenses. Now, I put a QuickBooks logo here because that's going to be the bookkeeping software that you track all of these expenses in. Now, you can use another one. That's just the most popular one. You could use FreshBooks. You could use Xero, but make sure you have a bookkeeping software that tracks your business expenses. If you are an S Corp, this is super important to understand. You have to pay yourself a reasonable salary according to the IRS. Now, if you're going to do that, you need a payroll processor. So, Gusto is one of the most popular. There are other options, but Gusto would allow you to pay yourself a W 2 payroll. Now, this would get categorized as a business expense on your profit and loss statement. That is why I put it here. Most likely, if you are an S Corp and you're paying yourself a reasonable compensation salary, it's going to be optimized. So it's going to be lower than what you may actually need to live off of. So I added it here, but you would also most likely still be taking additional owner's pay distribution. So just remember that. If you're not an S corp, don't worry about that. You really don't need to consider an S corp until you're probably approaching $75,000 to $100,000 in profit, not in revenue. And then I did add this one optional business credit card. So a lot of people will like to get the rewards, the cashback, etc. So they'll put all of their business expenses on a business credit card. And that's totally fine as long as you're not overspending because you're using the business credit card. And then all you have to do is rather than pay the business expenses individually, this would actually just be one payment where you pay off that business credit card every single month. You not the minimum balance because then you'll accrue interest, but you pay off the entire balance that you're spending on that card every single month from your business bank account. Okay. So then we're going to move into what is your personal checking and savings account. So I put Ally here because I love Ally. It's another online bank. They have a really good high yield online savings account, but I actually like their online checking account too. I can get a debit card. I can move money around and bucket it like I do with Novo. And so this could be any bank. I mean, a lot of people will use local credit unions. They'll use Bank of America, Chase, Wells Fargo, etc. So this could be anyone. This is what I show here. So that tax account I was talking about earlier, when you're setting aside 20 to 25%, I actually want you to have an online savings account at Ally where you can just kind of sit that money until you pay the IRS. And then your owner's pay is going to go into your personal checking at Ally or whatever bank. And that's it. Those are the two things. Now, if you have, I should have added this here as well. If you have a salary from Gusto, that would also go to Ally as well. So that would go to your personal checking as well. So those are the funds that we've kind of moved through the funnel that are going to make it to your personal checking and savings. Now we're looking at what people traditionally call your personal finances, but when you're a business owner, especially a small business owner, they really blend together because if you're overspending in the business, you have less money to pay yourself on the personal side. Therefore, you're going to be broke and not be able to hit your goals, right? And so this all works together. And what we're going to do is we're going to circle back here after we finish going through this and show you how you can audit and figure out where the holes are in this cash flow funnel. So this is what I like to call the 4F spending plan. You've got your financial goals, which yes, should actually be the first thing that you're planning out. Because when you take this off, it gives you less ability to spend in other areas. Whereas if you try and save this for the end of the month and just like, okay, whatever I have left, I'll save and invest, there's nothing left. This is Parkinson's law, where it's most of the time you hear Parkinson's law applied to time, right? Like if you have a project and you give yourself a week, it's going to take a week. But if you give yourself a day, you can get it done in a day. It's the same thing with your money. And so what I want to see is actually setting aside a percentage for your financial goals. Now, because I work with a lot of younger individuals, I don't just say investing. Most people will say, what's your savings rate, which is getting invested. I'm looking at your overall financial goals. So if you have debt that you need to pay off, this is I include this in this percentage. Savings such as emergency fund or short-term savings, and then investments. Yes, I put the altruist logo here because I help clients invest their money and I manage those investments for them at Altruist. But this could be Vanguard, Charles Schwab, Fidelity, etc. If you're doing it on your own. And then we're looking at your fixed expenses. So what's your rent, your mortgage, your utilities, your car payment, your student loans? What are the things that every single month this comes due? And it's pretty much the same amount every single month. You don't have a lot of control, right? Your utilities, they might fluctuate, but you don't have any control really around that. But it's going to hit every single month. You're going to have to pay that. So I call this fixed in the sense of that they're always coming due. Doesn't necessarily mean it's the same exact amount every month. And then flex expenses is a little different because Yes, it might happen every single month, but you have some control, right? Groceries. You can control to an extent how much you're spending at the grocery store. Now, I get it. Inflation's gone crazy, groceries are up, but you can choose if you're buying the gourmet steak or, if you're buying, 85/15 ground beef instead, right? I digress, but like you have some control over groceries, gas, etc. And then fun expenses. This is super important. A lot of people they don't include this, but you do need to set aside money every single month to like live life and enjoy it. And this is going to look different for everyone. Sometimes it's travel, it's dining out, it's um, entertainment, concerts, sporting events, etc. So whatever that is for you, make sure that you are actually planning for that. And then you just repeat this every single month, right? And so let's take a look at what you could do if you're getting to the end of this funnel and you're broke and maybe you don't have enough for one of these categories. Let's take a look at what to audit and figure out where things are going wrong. So if we take a look here, this is, let me get my little handy dandy tool here. All right, so this is revenue. So the first thing you want to look at is, well, one, are you bringing in enough revenue? Because if you're not, then everything else is going to break. But if you're doing 10K plus a month, you probably have the revenue. Something else is probably getting broken in here, right? And so take a look at revenue. What is that? Is that enough for you? If it's not, then you need to focus there. You need to increase sales. You need to learn how to market and sell better. And I've done so many interviews with business coaches on the Dollars and Dumbbells and the Financial Playbooks podcast, and I've posted some of them here on YouTube as well. So go ahead, check those out, and learn a little bit more about how you can increase your revenue. That's not really my forte. That's not what I teach. I teach you how to manage the money you are making. But let's move on. Let's say it's not a revenue problem, right? You've got a solid revenue. It's getting paid out to your business bank account. There's really like here, there's not a whole lot that you can control, right? Stripe's going to take their fees, PayPal's going to take their fees. Not a whole lot you can do. It shouldn't move the needle that much, right? But what you can do is right here. This is going to be a big one. So your business expenses are going to determine what's your profit. So if you're spending, let's say you're getting 10K into Novo. Well, if you're then spending 9K here, yeah, there's not a whole lot to go around here. So you're going to be broke. You're going to feel broke. So, let's take a look. If what's an ideal ratio for this? And you can think of this like a regular sales funnel, right? In the sales funnel, you would have click-through rates, you'd have conversion rates, etc., as you go through the funnel, and that's exactly what's going to happen here, right? So this is going to be your profit rate. So if you can keep business expenses as a solo business owner, you probably want to keep them to about 30, maybe 40% tops of your expenses, which would then mean you have a profit rate of 60 to 70%. So that would mean 6 to 7 grand actually flows through. Now, you're taking, in this scenario, let's use 10K. You're going to do 20 to 25% to tax. So that's 2,000. Let's put this up here to 2,500. And then what are you paying yourself, right? Because then this is what could be broken. If this is too high, the business expenses is too high, well then you're already taking a chunk here. If there's not enough left here, well then how are you going to support all this? This is going to be broken. So what we're going to look at is if we can fix this, make sure the profit rate is sustainable, and we can set aside your tax money, then we should be able to pay yourself a decent amount in owner's pay. So if we look at that 10K example, which may not be the best example, but let's just take a look at it. So if you were to take, let's do 70%. So you would have 3 grand in expenses. You would have, let's say 2000, because if you're at 10K, you're probably at a little bit of a lower percentage. If you were bumped up to like 20K, I'd probably go towards that 25%. But let's say that's 5 grand. So now you've got 5 grand that's coming to your personal checking. Okay. Now, will that be enough for all this? Well, that really depends on your lifestyle. That depends on where you live. It depends on if you have a spouse supporting your goals. Because if you do, actually, then their income needs to come into this. And so we won't really dive into that here. But the whole point of this is personal finances now. And if we're doing this with a spouse, with a partner, then we really should be adding their income into this plan. And regardless of some people manage this a little bit differently, but that's just something we could take a look at. Okay. All right. So if you had 5,000 flowing through to here, if your fixed expenses are, let's say, 4,500, which probably isn't too unreasonable depending on where you live. There's only $500 left for this, and this. That's probably not going to move the needle. I mean, that's definitely not enough for your financial goals, and you're most likely going to have zero thereafter in living expenses. So, what could we do to fix that? Well, you can either go back and you can increase revenue, so that way more flows through this funnel. You could try and increase profit, right? So lower your business expenses right here, and then make sure you're having more profit flow through. You don't really get to control the taxes there. You got to pay the IRS based on your profit. And so, one thing you could do though is work with a professional to get a more accurate number. So maybe 20% is too high, maybe 25% is too high. But if you get a more accurate number, then you can accurately set aside that money, avoid tax surprises, and not owe the IRS anything. So, this is a cash flow funnel. You can play with this. Everyone's going to have a very custom cash flow funnel. I help my clients go through this and figure out, one, where is their money coming from? Where are they holding it? What accounts are they using? And just visualize. And then we take a look and we list out, what are your financial goals? What do you need to save and invest to achieve those? What are your fixed expenses? Can we eliminate some of them? Right. So that's one thing we didn't talk about. If you're at 4,500, is can we go through and audit that and see, like, are there some of these expenses we can lower or get rid of? Same with flex expenses, fun expenses. And with fun expenses, a lot of times it really comes down to like prioritizing your values. Like, what are your actual values? And is this just an excuse to overspend in areas? And so, yeah, this really messy chart is exactly what's going to help you manage your finances as a business owner and make sure that you're paying yourself enough, that you're hitting all your financial goals, you're avoiding all tax surprises, and you're just less stressed and less chaos each and every month because you know exactly what you have to do. The plan is super clear, and you can just start taking action and executing it. If you found this helpful, then I really think you'll like this case study I did that shows you how you could save and invest and have a 6 million portfolio as an online coach. Check that out right here.